Gold and silver historically have done really well in these kinds of crises, although there's a timing issue there too, because they're getting smacked as we're speaking right now, along with equities. And that has happened in the last two bear markets where stocks tank, and that pulls gold and silver down too, which in retrospect was a phenomenal buying opportunity because they were V bottoms. Those precious metals tanked, they went down, and then they bounced right back off the bottom and went on to new highs. So we could be looking at something like that again, which means keep some powder dry. Have some cash with which to buy depreciated assets if we have just a general bear market where everything goes down. It's completely possible there are some epic bargains created that are life-changing opportunities if you play them right.
Gold continued its march lower on Tuesday, while global equity markets steadied after the previous day's rout. Precious metals were dragged down by the general panic mood on the markets at the start of the week, according to a Tuesday report from Commerzbank AG. Along with overblown expectations of Fed rate cuts, selling to compensate for losses in other assets may have also been behind gold's recent weakness. Renowned Wall Street financial analyst John Rubino points out that gold and silver have historically thrived during crises, despite occasional declines alongside equities. He suggests that these dips offer valuable buying opportunities and advises keeping cash ready to capitalize on potential price drops. Numerous experts and agencies within the gold sector offer expected gold prices in 2024. While gold prices have been influenced by the higher-for-longer global monetary policy approach, certain agencies and AI-based platforms remain bullish about a projected surge surpassing $2,000 per ounce in 2024 and beyond. Given the prospect of a currency-related crisis, John Rubino predicts it's wise to avoid long-term government bonds and be cautious with bank stocks. Some corporate bond issuers are expected to delay sales this week. According to bond market participants, aftermarket volatility caused investors to trim corporate bond holdings in favor of safer U.S. Treasuries. For financially sophisticated investors, Rubino mentions that shorting assets, such as buying options on tech stocks, could be a lucrative strategy in the current market environment. He points out that recent market conditions have provided opportunities for profit through shorting. Now we present the clips of John Rubino's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
There are lots of financial and lifestyle things that we should be doing in a world where these things that we've been talking about are in prospect now. Really strange, hard times might be coming. And one way you deal with that is, especially if it's a currency-related crisis that's coming, is you get out of the financial market or the part of the financial market that depends on the value of fiat currencies for its value. So don't own government bonds, at least long-term government bonds. Short-term government bonds are much less risky than long-term. And be careful with bank stocks and don't put all your money in a single local or regional bank because bailouts are coming and bail-ins are possible. And there's no guarantee you get your money back in a timely way from a bank crisis. And, gold and silver historically have done really well in these kinds of crises, although there's a timing issue there too, because they're getting smacked as we're speaking right now, along with equities. And that has happened in the last two bear markets where stocks tank, and that pulls gold and silver down too, which in retrospect was a phenomenal buying opportunity because they were V bottoms. Those precious metals tanked, they went down, and then they bounced right back off the bottom and went on to new highs. So we could be looking at something like that again, which means keep some powder dry. Have some cash with which to buy depreciated assets if we have just a general bear market where everything goes down. It's completely possible there are some epic bargains created that are life-changing opportunities if you play them right. So own a fair bit of gold and silver, but be able to buy more if they tank here, because the government, when it comes in with its panic liquidity, will send gold and silver back up. If you're financially sophisticated enough to short things, in other words, to bet not on things going up, but on things going down, the last few days have been an epic opportunity to make a lot of money. If you placed a short bet, in other words, let's say you buy a put option on the NASDAQ, which means you bet that tech stocks are going to go down. You made a lot of money in the last few days. If you want some action, that's the kind of thing that we're prepped for as a system. We're ready for the shorts to make a lot of money at some point in the not too distant future. And then as far as lifestyle goes, it's a good time to be handy, and it's a good time to acquire skills that allow you to, for instance, fix things when they break, or grow your own food, or handle a firearm if needed, things like that. If you don't already know how to do those things, it's time to kind of become a prepper. And it's time to make that list and tick that list off as you learn how to do things like that, and connect with people who can teach you more, and build a community of people who see the world the same way and are ready to deal with hard times when they come. So all of that stuff is just out there, and we should all be doing it. And potentially we protect ourselves in a lot of ways. Potentially we make a lot of money if we do the investment part of this right. So this is, in one sense, an incredibly scary world that we live in right now. And in another sense, it's a world full of opportunities. So pay attention.
Regarding the BRICS countries, John Rubino mentions their strategic moves to establish alternative systems and create a new trading currency backed by gold. He predicts that upcoming meetings could lead to significant developments challenging the US dollar's dominance, possibly affecting economic stability. Reports suggest that BRICS could back their new currency with gold, not the US dollar or other local currencies. The alliance aims to return to the gold standard and maintain a multipolar world for all trade and transactions. The World Gold Council reported that BRICS has been the largest buyer of gold since 2022 and is accumulating tons of precious metal in the reserves. The BRICS members are striving to conduct more trade between themselves in their own currencies to gain more global influence and counterbalance the dominance of the US. The new development bank has targeted a third of its lending in domestic currencies by 2026. In John's view, the inevitable burst of the everything bubble could mirror recent market turmoil driven by various risks like geopolitical conflicts. He anticipates significant market disruption soon, though the exact catalyst remains uncertain. Let's get back to the interview.
The BRICS countries seem to be doing the right things in terms of monetary policy and, financial structure and things like that. Now, I'm not complimenting the dictatorships that are the leaders of the BRICS coalition. I'm not saying they're good guys or anything, but I am saying that they're making the correct moves when it comes to monetary policy. And a lot of that is in reaction to the US. We're using fiat currencies in the West as weapons against the rest of the world. So the rest of the world is responding to that by trying to set up their own monetary and financial system. And that means, replacing the IMF and the World Bank with their own organizations, and the SWIFT International Bank Settlement System with one of theirs, and possibly a trading currency that is backed by gold and that they use to balance out trade flows among themselves and bypass the dollar in that way. There's an October 10th meeting. I think it's the 10th, but it's definitely in October, of the BRICS countries. Since just this last week, the European Union seized frozen Russian assets and sent those assets to Ukraine. The BRICS countries are highly incented right now to speed up the process of de-dollarization. So it could be that we see kind of a dramatic announcement of some kind at the October meeting, and maybe it's that currency, or maybe it's that they're letting in a bunch of other countries. The last time around, they didn't come up with a new currency, but they did admit Saudi Arabia into what is essentially an anti-dollar coalition. So maybe they'll do something like that again with some other important countries. We can't know that. Suffice to say that the BRICS countries are making the right moves. They're buying lots of gold, and they're encouraging their citizens to buy gold. They're cutting bilateral trade deals with each other that bypass the dollar, and they're talking at least about some kind of a currency that makes the whole bypassing the dollar thing official. So this is a real thing. The BRICS countries own a lot of natural resources. They account for a big part of the Earth's population, and not a majority, but a decent size chunk of global GDP. So they're important, and the more we antagonize them, we in the West, the more likely it is that they take some pretty serious steps And it's completely possible that at some point, this threatens the hegemony of the dollar and then leads to a falling dollar and rising inflation in the US, which, is the last thing we need right now. But it's a complete possibility in the next few years. When the everything bubble bursts, it might look a lot like the last couple of days. And I, can't know for sure. Nobody can know for sure that this is the end of this very long, very extreme bubble. But that bubble is going to burst for sure. We'll get an equities bear market. We'll get crashing asset prices. We'll get political turmoil. All of those things will be just part of the bursting of the everything bubble, and it's eventually going to happen. There are so many different things that could be a catalyst for that, and there are so many different ways it could go that there's no way to know for sure. But I'll tell you what, the Japanese market tanking is a pretty reasonable catalyst, and World War III, we're blundering into wars with multiple nuclear armed countries out there in the world. And, a shooting war with any of them would set off a financial crisis of epic proportions, I think. And right now in the Middle East, we're very close to something like that with Iran. In Ukraine, we're very close to something like that with Russia. And in China, we're just perennially picking a fight over there. So it's completely possible that all these financial things we're talking about end up not being the catalyst, and it ends up being some kind of a geopolitical thing. But the important thing to understand is that there's like 20 different things that can blow up this market right now, and we can't know which one it's going to be. But I think there's a safe bet that one of them causes some serious trouble in the very near future.
In trading circles, gold is predominantly viewed as a long-term investment, prized for its role as a protective asset that tends to gain value during global turmoil, especially when stock indices and currency values falter against the US dollar. Some forecasts even project that geopolitical risks could propel gold prices to as high as $2,500 to $4,000 per ounce in extreme scenarios. How are you preparing for potential economic shifts and market disruptions in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.